Hello everyone, welcome to today's video. Today's topic is actually a little bit easy topic for many of the students. When it comes to this topic, most of the students used to say that okay, it's very easy topic. I can easily score 3 or 4 marks for which it comes. So the marks keep on fluctuating from year to year. But this question is one of the integral part of your CBSE board exam question paper. This topic, not question, this topic is very important. So today we are discussing a different type of question from the same topic. So by now you must have got, by looking at the screen, you must have got that which topic are we going to discuss today. So obviously it is about comparative statement of profit or loss, and we know many other statements are there. Comparative statement of balance sheet is there, or comparative balance sheet is there, and common size statement of profit and loss is there, or common size statement of balance sheet is also there, or common size balance sheet is also there. So today we are going to discuss about comparative statement of profit and loss, where we are going to discuss how the values are. Say for example, here what are the criteria to calculate, what are the basic things, formula that are involved in the calculation of the values, and how to fill up this statement which is already given here. So I am not drawing the statement again, I am just discussing, we are just discussing about the finding of the values which are missing here. Without further delay, let us start with the topic. First of all, what is a comparative statement? Forget about the term balance sheet or profit and loss account. Just think about the term comparative statement. What does it mean? So comparative statement is nothing. We are comparing the financial data of 2 years, and we are finding out the actual change that happened in the values over this 2 years, over the period of these 2 years. It need not be always year, but mostly we are doing based on years only. So we are comparing the values of previous year as well as the current year. We are comparing both, and we are finding out the difference between these two values, and that value is called actually absolute change. Then we are converting this absolute change into percentage, which is called percentage change. So when you are finding out the value of absolute change, always remember we are finding out the difference between current year value and the previous year value, not the opposite. Previous year value minus current year you should not do. You have to always do current year value and previous year value difference. So current year comes first, followed by previous year. Okay, absolute change. So absolute change is like that. Then once you find the absolute change, you have to divide it by the previous year's value into 100. First you divide it by the previous year value multiplied by 100. So you will get the percentage change. The same procedure is followed whether it is common size comparative balance sheet or comparative statement of profit and loss. So normally this same format is followed. Comparative, whether it is comparative profit and loss or comparative balance sheet, only the basic structure of the statement will change. The basic structure means what? How balance sheet is drawn, you know. For a company, first non-current asset, non-current liabilities, that means equity and liabilities part will come. In that first one, shareholders funds will be there, other values also will be given, non-current liabilities will be there, current liabilities will be there. One more is there actually, share application money pending allotment. So there are 4 main heads, more main categories which are involved in the equity and liabilities part of the balance sheet. Similarly, on the asset side, when we see, when it comes to balance sheet, asset side, 2 main categories will be there, non-current assets and current assets. Non-current assets and current assets, that is how it is done. Now when it comes to comparative statement of profit and loss, obviously profit and loss accounts main structure will be done there. What is that? Revenue from operations will be there, other income will be there, total income will be there. Then next is expense side, expenses, all the expenses will write. Then after that there are certain categories of expense. I am not going into deep with the format. So basic structure of the profit and loss account will be written. Then after that total income will total expense will be written. We will find out the difference between these two, total income and total expense, that will give us profit before tax. Then tax rate will be given. The tax rate we have to calculate on which value? Profit before tax. Then we have to deduct the tax. Then finally we will get an amount called profit after tax. This is the procedure to calculate profit. Now when it comes to comparative statement of profit or loss, 2 extra columns will be added. Current year value also will be there, previous year value also will be there. So it is always advisable to write previous year value first, followed by current year, then find out the absolute change. Okay, find out the absolute change. then find out the percentage change. Find out the percentage change. So there also same procedure only. Absolute change means current year value minus previous year value. Find out the difference. Difference divided by the previous year value, multiply by 100. You will get percentage change. That is absolute change and percentage change column. Now coming to this, here comparative statement of profit and loss is given. So obviously same formula will be used. We will discuss about common size statement also soon. Okay, in the same video we will be discussing about common size statement also. As you can see here, absolute change, sometimes amounts are missing here, sometimes current year value is missing, sometimes previous year value is missing. So we will see how this kind of questions can be attempted. So as you can see here, first amount is revenue from operations. Right, first amount is revenue from operations. Revenue from operation means what? Basically it is called sales amount. So revenue from operation, last year it was 16 lakhs, this year it is 20 lakhs. Last year it is 60 lakhs, this year it is 20 lakhs. So absolute change, when it comes to absolute change, you know already the formula. What is the formula? Current year value minus previous year value. Current year value, previous year value, if you are deducting, that means 20 lakhs minus 16 lakhs, you will be getting 4 lakhs. You will be getting 4 lakhs. Percentage change, when you are calculating, what is the formula is current, that means absolute change, whatever value you got there, divide by the previous year value, which is 16 lakhs into 100. Okay, into 100. So how to calculate? First you have to write the absolute change. Absolute change is 4 lakhs. Okay, absolute change is 4 lakhs. 4 lakhs divided by 16 lakhs into 100. That means you will be getting 25%. So when you are writing percentage, always write percentage like this, 25 dot 2 digits after that. Even if it is 0, you just put 2 zeros, that's it. So this first line is done. So I will repeat what we did here. First we found the absolute change. Absolute change is very easy. Current year value minus previous year value we did. So you are getting 4 lakhs. Sometimes you may get negative value also possible. So sometimes current year value, say for example in this case itself, we just assume that 16 lakhs were for current year and 20 lakhs were for previous year. 16 lakhs minus 20 lakhs, you will be getting how much? Negative 4 lakhs. So negative is indicated with brackets in the comparative statement. So similarly, when you are calculating the percentage also you have to put inside brackets. If it is 25%, 25%. Clear? So this is how you have to do. Now employee benefit expenses, as you can see, 2 columns, again values are missing, but it is not like the previous line. Previous line it was absolute change column and percentage change column. Now we are having values missing in current year column and absolute change column. Current year column and absolute change column. Current year column, when you are doing, as you can see, 25% excuse me, 25% is shown in the absolute change column. Absolute change column, what is the formula? Absolute change, percentage change. Sorry. So percentage change, what is the formula? Absolute change divided by previous year value into 100. That means absolute change we don't know, previous value we already know, that is 8 lakhs. So why I did the calculation first is just to explain, it will be easy for you to understand. So as you can see, absolute change divided by 8 lakhs. 8 lakhs was previous year value, multiplied by 100, we are getting the answer as 25%. Now absolute change, how to find? Bringing all the values to the other side. So 8 lakh here it is into 100, so it will be divided by 100 and 8 lakh will go to the numerator part. That means 8 lakh into 25 will come. So this is the calculation. You are getting 2 lakhs. That means absolute change column's value is 2 lakhs. Now you must be thinking, okay, is there any other easy way? Sometimes you must have already got one more easy way to think. Absolute change percentage, when it comes to percentage, it means that compared to last year's value, this year, as you can see, it is positive 25%. It can be negative also, it can be coming inside bracket also possible. Here you can see the value, the absolute change percentage, that means percentage change is 25%. We can call it as absolute change percentage itself. So here 25% means compared to last year's value, we are having 25% hike in the value. That means 25% hike from which value? Obviously previous year's value. That means instead of doing all these formulas, we can just do like this, right? Last year's value, if you know, means the current year's value is 25% more. That means 25% of which value? Previous year's value is 25%. So directly we will get how much? 2 lakh. That means current year's value is 2 lakh more than the previous year's value. 2 lakh absolute change we can write there. 2 lakh more than the previous year's value means current year value will be 10 lakhs. Current year's value will be 10 lakhs. Similarly, other expenses, as you can see here, less other expenses are there. Here two different columns are again missing. One is absolute change percentage is not given. As I mentioned earlier, absolute change is given inside the bracket. What does it indicate? Before, in the beginning of the calculation itself, we have mentioned that, or we have discussed that negative values, that means sometimes change will be decrease compared to previous year's value, this year's value may be decreasing. In that case, instead of showing positive value in the column, we may show it inside the bracket. So as you can see here, 1 lakh is shown inside the bracket. That means compared to previous year value, current year value is 1 lakh rupees less. So directly we can say, right, if previous year value is 2 lakhs, current year value will be how much? 1 lakh only, right? Now easy to find out which one, the percentage. So previously it was 1 lakh divided by 2 lakhs into 100. So 1 lakh divided by 2 lakhs into 100, how much you will get? 1 by 2 into 100, you will be getting 50%. You have to put this 50 also in bracket, as the absolute change is negative, the percentage change also will be negative. Okay, next one is profit before tax. For this purpose only I said explain the format of the profit and loss account. What is the format of profit and loss account for a company? Obviously revenue from operations will be there, other income will be there, then expenses will be there, expenses we will add, then subtract, find out the difference between these two, then you will get one value. That value is called profit before tax. Okay, so what are we supposed to do here? Revenue from operations is already given. We need to find out profit before tax, means remove all the expenses from that. 20 lakh was the second year, that means current year's profit, current year's revenue. From there we are going to remove employee benefit expense and other expenses. So 11 lakhs we have to remove, so which will leave us with 9 lakhs. 20 lakhs minus 11 lakhs. Those who don't know the calculation, revenue from operations minus employee benefit expenses minus other expenses will give us 9 lakhs. Okay. Next is tax at the rate of 30%. So we will calculate the tax at the rate of 30%. Before proceeding with that, we need to see what is the third column, absolute change. So here as you can see, profit before tax for the previous year was 6 lakh rupees. Now it is 9 lakh rupees. Absolute change will be, obviously when you are comparing the current year value with the previous year, how much change is there? 3 lakh rupees change is there. So 3 lakh rupees change means you can see 3 lakh divided by last year's value into 100. how much you will get? 50 percentage, which is already given here in 50 percentage. That is how they have calculated the 50 percentage. Okay, that is one way to calculate this. If not, if suppose you are not okay to calculate like this, revenue from operations, employee benefit expense, other expenses, if you are not able to remove this, there is one more way. We will discuss that also. Let us see one more method which we can, by which we can calculate this. Which is that method? If suppose you don't have, or you don't know, or you want some other easy method, revenue from operations minus expenses will give us profit before tax. Is there any other method? As it is given 50 percentage here, we know that profit before tax has increased 50 percentage in the current year. That means last year it was 6 lakhs, previous year it was 6 lakhs. Now 50 percentage increased means obviously increase is 50 percentage, that means 3 lakhs. So absolute change will be how much? Same 3 lakh you will get. Similarly, if you are adding the 3 lakh with the previous year 6 lakhs, you will get what? 9 lakhs. This 9 lakhs you have to mention here in the current year column. In that way also you can find your choice. Next is tax at the rate of 30 percentage. On which value we are calculating tax? As I mentioned earlier, obviously on which value? On the profit before tax only you are calculating 30 percentage. So here 6 lakhs, 6 lakh is the profit before tax for the previous year. So 6 lakh into 30 percentage, how much you will get? 1,80,000 you will get. So first it will be 1,80,000. Next year, as you can see, 90,000 is mentioned here. Absolute change is 90,000. That means from there itself we can say, compared to the previous year, this year's profit before the tax rate has increased by 90,000. That means last year it was 1,80,000 means this year it will be 1,80,000 plus 90,000. That will give us 2,70,000. 2,70,000. So that is one way to show. So 2,70,000 we are showing. So that is done. So 2,70,000 we can write. If not, if suppose you can't do like that, then what is another method? Tax is 30 percentage. 30 percentage which value? That particular year's profit before tax. So second year, that means current year's profit before tax is 9 lakhs into 30 percentage. You will get how much? 2,70,000. The same 2,70,000 which you wrote here by adding 90,000 with 1,80,000. That is also one way. Now percentage change. Percentage change, what is the formula? Absolute change divided by previous year's value, 1,80,000 into 100. So 1 to 50 percentage. So we will be getting 50 percentage here. Similarly, profit after tax. What is the formula for profit after tax? 1 year's profit before tax minus the tax that is applicable for that particular year. So 1 year's here, in this year 6 lakh is the profit first year, means previous year 6 lakh, again 1,80,000 if you are removing, you will be getting profit after tax. That is why they have mentioned it as 4,20,000. Similarly, if you are doing for the next year 9 lakh minus 2,70,000, 9 lakh minus 2,70,000 is how much? 6,30,000. 6,30,000 you can show here. 6,30,000 you can show here. So next is 4,20,000, 6,30,000. We can write difference is obviously 2,10,000, that you is already here. Now percentage change. Percentage change is 2,10,000 by 4,20,000 into 100. 1, 2. Here also you will get 50 percentage. How did we do that? This 2,10,000 divided by previous year value into 100. So don't think like, okay, this profit before, one of the common mistakes that students do in the exam hall is like this: profit before tax, one value will be there, tax will be there, they will remove it. So first current year column, previous year column, they will do like that. When it comes to percentage change also, they will do the same process. What is that? last year 50 percentage was there, or last year, say for example, previous absolute change last is 3 lakh, here it is 90,000. Similarly, last year's last previous year previous value was 50 percentage, now also 50 percentage, profit after tax is 0. Don't do all these kind of things. These are all like some of the mistakes that student does, thinking that all the columns we have to do in the same manner. It is not like that. Up to the third column, absolute change column, if you are doing like that, you may get the value. Last column 50 percentage minus 50 percentage, it will be 0 percentage. Don't think like that. We are not doing like that. Formula is always same, absolute change divided by previous year value into 100. Okay, absolute change divided by previous year value into 100. This is the case of comparative statement of profit and loss. So missing figures kind of questions also you can expect. Though the process by which you are calculating until profit after tax, you should remember. Next thing is how to only two basic formulas are there. One is absolute change formula, current year value minus previous year value. Next is percentage change formula, absolute change value divided by previous year's value into 100. You will be getting the percentage change. This is how you have to do. Okay, so these are the things that you have to do for calculating or finding out the missing figures when it comes to comparative statement of profit or loss. I hope I made the concept clear. Thank you.